There are many ways to understand Fed June FOMC meeting for beginner trader. Their FOMC statement and most famous projection material and most powerful thing their SEP dot plot. It is most dangerous thing, and this week it changed the market sentiment instantly. And Fed press conference speech. So start with this video and few important things which Fed said in this FOMC speech. So number one and most famous, talking about a couple of years out for rate cuts. No policymakers see rate cut this year. So all FOMC member saying no rate cut this year. And this single line was enough to create panic in market. So let's see what happened on Monday and this week before July FOMC meeting. But you have seen hedging in financial market after his speech. Not a single person wrote down rate cut this year. So all FOMC members were saying rate hike before this week FOMC meeting, but nobody is saying rate cut. So that was clear signal from Fed for no rate cut this year. Then again, rate cut this year will not be appropriate. It will be appropriate to cut rate when inflation comes down. He is saying since Feb FOMC meeting, if inflation come down, then they can cut interest rate. He is saying about core PCE number, which is not going down. CPI is going down, but not core PCE. Fed will not finance US debt. That's mean money printing policy. We are strongly committed to 2% inflation target. So until the 2% inflation target is achieved or they are confirmed that they are near their target, they will not cut interest rate. Then next, nearly all policymakers view some further rate hike this year. First they are saying no rate cut this year, then two more 25 basis point rate hike this year. Because before FOMC meeting, market was expecting two rate cut of 25 basis points in November and December FOMC meeting and pause in July and September FOMC meeting. But Fed say he will hike two more times and no cut this year. So there was total 100 basis point difference in Fed interest rate market pricing. Then next comment, we will continue to make decision meeting by meeting. So let's see what they say in July FOMC meeting. The hike or pause. Then next comment, Fed projection are not a plan or decision. That means their rate projection of 5.6 can be changed. But for that, we have to wait till September FOMC meeting. Then next comment, cumulative tightening. They are talking about lag effect. At the same time, they are projecting two more rate hike. So that was big hockey signal from Fed. Then next, we did not make decision about July. And so Fed was told is expecting a hike in July FOMC meeting, but he said they had not made decision. So before July FOMC meeting, indicator like NFP and CPI, they can change their monetary policy decision. They are saying they are going closer to goal and at the same time they are saying more hike. But reality is May FOMC was your last hike and Fed has paused interest rate. But because of AI bubble, he cannot say think clearly. Otherwise, rate cut for Fed will be difficult. Then next, things we need for disinflation are coming into play. Process will take some time. Now CPI was dropping very fast. Speed is increasing as expected, and they are saying since Feb FOMC meeting. But they will not panic until core PCE drop vertically. Then next, supply chain condition continue to improve. Many people are again talking about this thing. Why? But we have to wait till future. But people are again talking about supply chain issue. Then next, question of speed on rate hike is separate from question of level of rates. This is most important thing, also explained in previous videos. If rate hike is aggressive, then after pause, rate cut will be aggressive because aggressive rate hike create aggressive downtrend in economy. So they are not talking about at what level interest rate will stop. They are projecting 5.6%. They are talking speed is important. That is very fast rate hike cycle. So this speed is more important than 5% or 6% terminal rate. This is new and important thing which he said in this FOMC speech. For him, speed of rate hike from 25 to 75 is important. Then rate pause at 5% interest rate. And things are confusing because at the same time he is saying two more hike this year. Then again, risk of overdoing and underdoing are closer to be in balance. Indirectly, he is saying Fed interest rate is now in perfect position. Then next, when we say inflation flattening or softening, we will know that tightening is working. CPI is coming down vertically, but they always pay close attention to core PCE. So core PCE is not coming like CPI number. Then next, not any certainty in our profession on length of legs. If you read these two lines, he is saying about two things. First is rate hike speed, then uncertainty about length of legs. When lag effect of this aggressive rate hike cycle will show effect on economy, there is no certainty. It can show today or maybe it can take up to next year 2024. But old definition is 18 month to 2 year. Then next, Fed forecast have been wrong on inflation last 2 years. They said in June FOMC meeting 2021 that inflation is transitory. Now after 2 years, they are saying that was wrong forecast. And FOMC member Kaskari, he was challenging to everyone to prove that inflation is not transitory. So you can expect in June 2025 they can say projecting two more forecasts this year 2023 was wrong. So this is the time maybe market lost faith in Fed because he does not have control on SP 500. Nasdaq is flying and AI bubble is already has become a new dot-com bubble. 2 years later, they are saying indirectly that they lost control on inflation. But right now, they are losing control on stock market. So this central bank does not have control on economy. They cannot control inflation, they cannot control stock market. And when recession will start, how they will control recession? So market is expecting same failure like inflation on their recession control. Because he said in a FOMC speech, continue to think there is path to soft landing. Then next thing, after their super hawkish rate pause, they are saying do expect there will be loss in CRE. Watching CRE carefully. And this rate hike from RBA and BOC and hawkish pause from Fed. This was coordinated attack from these central bank on real estate market. So everyone is waiting for news, but they are hedging at the same time. You have seen FOMO last week, gold was going vertical because ECB also forecasted rate hike. So these central bank want a fear in real estate market, and they are talking about losses. Then according to Wall Street Journal, there will be $1 trillion loss. And most important thing which he said, path to soft landing. Because of his soft landing dream, if you see SEP, then this dot plot completely based on their soft landing dream. From 5.1 now they are projecting 5.6% terminal rate because he believe in soft landing, and if there is a hard landing then he will not say 5.6%, because if you see his projection for Fed interest rate, then everything is increasing from 5.1 to 6, 4.3 to 6, then 3.1 to 3.4. GDP is higher, unemployment rate is lower, and PCE is lower. So he is giving forecast for soft landing. So same like transitory inflation in June 2025, he will say again that forecast for soft landing was wrong.